Today I give an introduction to crowdfunding with some best practices. With crowdfunding, it is possible to raise funding but also build a strong fan base of supporters. Some companies use crowdfunding to strengthen their relationship with existing customers and fans, while other companies use crowdfunding as a way to build a community. It's important to know there are different types of crowdfunding, and people expect to receive different types of returns from it. With reward based crowdfunding, they will expect to receive a product or service from the company. With crowd lending, they will receive interest and repayment of the loan after a couple of years. With equity crowdfunding, they become a small shareholder in the company. And with profit sharing, they receive a financial reward based on the financial results of the company. In this video, I will focus on reward-based crowdfunding and equity crowdfunding and show two very successful cases and explain what we can learn from them. To build a strong crowdfunding campaign, it is important to have a clear goal, a great communication strategy, and a good story. In this video, I will show two examples of companies who did a great job in implementing this strategy and had a very successful crowdfunding campaign. When starting a company, you can try to sell your idea to investors, invest the money in production, invest additional money in marketing, and try to sell your product to customers. Only at that time do you know if there is indeed a real market demand for your product and how many people are interested in buying your product. This is the traditional way for a business-to-consumer company to start. Another option is to turn this process around and start with the customers. If you are able to ask your customers in advance if they are interested in buying your product and pay with a good discount already in advance, you know for sure there is a demand, and you are able to attract the needed investment at the same time. When the founders of Pebble wanted to raise funding in 2012, they used the same process. They invented and created a prototype of a smartwatch that could be programmed with different apps. None of the large IT companies developed that already at that time, so they were really innovative. At that time, reward-based crowdfunding was mostly used by creative companies to finance events, and people received an entrance ticket in return. They wanted to try to raise funding for the production of the first watches, and as a reward, they would give their backers the watch for a discount. They needed $100,000 to start the first production of their watches. For this, they started a reward-based crowdfunding campaign at Kickstarter. The funding was already raised in the first day, and at the end of their campaign, they had raised $10.3 million and 60,000 people supported their campaign. It was a huge success, and they knew they should upgrade their plans. So, why was this project so successful? To start, their pitch was really clear. They developed a prototype and had invested a lot of effort in creating promotional material to explain their product. The reward was also simple. For everyone who backed their product, they would send out one or more of these watches. They also knew their market well and were partly lucky that most of them were already active on Kickstarter. They targeted young, tech-savvy people, and these people are active online and used to buy online products. So with free publicity through tech blogs, they reached a lot of people who are willing to invest. Finally, they made a smart move by ensuring that their first target amount of $100,000 was quickly reached. This provided trust for future backers, but also created a lot of free publicity about the project. And at that time, it was by far the largest and most successful crowdfunding campaign worldwide. For this company, it was not a one-hit wonder. With the introduction of another watch in 2015, they pre-launched it again through Kickstarter. And during that campaign, they were able to use the previous fan base to reach out to even more people. And at the end of that campaign, they raised more than $20 million and 70,000 people backed their product. 1 year later, the Pebble 2 was launched, and again, they raised $12.8 million. Until now, this is still the most successful company raising funds through reward-based crowdfunding. Another crowdfunding champion is Brewdog. Brewdog is a Scottish brewery that wanted to raise investments to grow, but didn't want to use traditional investment firms. Their first campaign was in 2009 with 1,329 people. They raised £750,000 with these very early investors with a strong marketing campaign. They promised their investors not only a share in the company, but they became also part of the Brewdog for Punks family and received a loyalty card. This membership card would get the investors a free beer on their birthday in pubs that have Brewdog beer and a standard discount on the beers. This loyalty card and the Brewdog for Punks campaign became very successful. And after their first seed funding round, they involved and informed their investors in the growth of the company and started another funding round in 2011. In this round, they received £2.2 million from partly the same, but mostly new investors. To scale up, they did further investment rounds in 2013, raising £4.25 million, and in 2015, they even raised £19 million. In total, they had 46,000 shareholders in their company at that time. But more importantly, they were all very strong fans and supporters. In 2018, they wanted to expand to the United States and started another campaign. They raised over £25 million from 90,000 investors, one of the largest crowdfunding campaigns in the United States. They will open a beer hotel and a number of bars in the United States. This is a great example of a company that is using an equity crowdfunding campaign for expansion and growth. They first do the marketing and try to find out if there is enough support for opening new offices or upgrading their production before making the investment. For the next expansion to Australia, they again plan a new crowdfunding round. By the way, it was also a very successful investment for the crowd investors. When a traditional venture capital firm invested in 2017, the company was valued $1 billion. The investors in the first round received a financial return of 2,800%. And even the investors in the latest round, 1 year before the venture capital investment, received a 177% return. So to conclude, in both cases it was clear that for business-to-consumer products, crowdfunding can be very successful. When introducing a clear goal, such as an opening of a new factory or creating a new production line for a watch, it's clear for the investors what the goal is. The reward is also short-term, the watch or a discount on the beer. Most importantly, both companies were very strong in PR and marketing and were investing a lot of effort in promoting their campaign. This created trust at the beginning of the campaign, and they were also very successful in keeping their fans happy and connected. This enables them to do follow-up investment rounds for future growth.